There's Sandip Agarwal, fund manager and co-founder, Sowilo Investment Managers, joining in right now. Sandip, are you having the last few days the pleasure of saying "I told you so"? ये तो मैंने कहा था. I was looking at the turnaround in IT because you did. To give you due credit, you did. And the question then is are the fortunes of equity prices or stock prices of IT companies improving because of anything these companies have done, or because the world is looking at the AI trade and feeling nervous?
No, so Tamanna, thank you for putting what I have said, and I know I don't think in the stock market we should be very humble. We can go wrong on the same day also. But let me put it this way: I still believe that logically there is huge money to be made in IT sector index, and I will tell you 2-3 reasons for that. And you can collaborate all what I'm saying since March. So March end I became positive. We started from almost zero weight to going to 5-8. I think we will be now much higher weight, and I would like to go to much higher weight, maybe 20-25% or maybe more in next 1 month time. And the reason is simple. Please remember that I am not talking only about IT services. It includes the whole proxy play to AI, which means I'm also playing hardware players, and there are few listed hardware players also. So here is the thesis which I was again and again saying for last 2-3 months, but there were very few buyers of the thesis that, see, the hardware cycle has come after 2 decades and everyone has benefited from it. That is the NVIDIA, AMD and everyone. Foundational players will benefit for next 10, 15, 20 years because they are the ones who have built the app around it, the Anthropic, the Gemini and all. And then once they sell this, there has to be someone who take care of the troubleshooting and day-to-day requirement, and also when the enterprise AI gets implemented. So I think the third layer, we always because we are honestly a labor arbitrage industry, if you see that way, because we hire people from the best institute, we train them in a best manner at large scale, and we deploy it for our clients. So once client, it is like construction business. Once client buys the land, someone builds the building, then we go and do the architect. So we are the architects. We will do the furniture finishing and everything, but our role will always come at the end. So just because there is a lot of land buying happening or construction happening, it will not show up in the numbers, but it will come with a lag effect. So we are now entering in that lag effect. I think that this quarter was the inflection quarter. September, you will see very positive numbers. And from there onwards, I think nothing will stop us for a few quarters, because this enterprise AI, someone has to implement. Demand is coming leaps and bounds. And I see scenario which is, I will not say exactly like post-COVID, because that has 2-3 years of demand bundled up together and a lot of work from home. And so this is not a disruption like that where you will see that kind of growth. But definitely I can tell you that no IT company will see net headcount going down from here onwards. In fact, I believe that in next September quarter, every company will have a positive headcount to add. And I can also say you, while I also have a view that large IT company cannot grow more than 6-7% for long term, but there will be a period in near term where they can do slightly better than that, but the mid and small cap will do phenomenally well. And last point before I hand over to you is that, as I said earlier multiple times, the day sell side analysts and all other analysts start doing numbers on Excel, they will have no choice but to upgrade the whole sector in a big way. Because when I do the rough maths, the thing I get is that minimum 45 to 70% EPS, cumulative EPS growth over next 3 years is given. And if that happens without sector re-rating, you will get that kind of return in next 3 years, which is a phenomenal return in the liquid sector, good management pedigree and huge cash flow generation. So I will be very happy with 70% cumulative EPS growth over next 3 years. Even if the sector doesn't re-rate, I will make 70%. At least I should make that 70%. So that is the way we look at it. I am not recommending any stock. I am not recommending any exit, nothing. But this is my view on the IT sector.
Yeah, and also goes to show margin of safety is there, right, Sandip? So I just want to ask a couple of things in clarification, though. When you're saying that you have the desire to push allocation to 20%, how much of that is the IT services companies? Because you mentioned that it also includes the hardware companies.
So, I have not done the maths honestly, but we want to go 20-25% totally in overall. But we have 2 hardware positions and rest 5-6 positions are all services. So I think majorly it will be services, but there is also a hardware position, to be honest.
Okay, so okay, understood. And so previously you had said, if I remember correctly, about I can't remember exactly when, but earlier this year you said that you can take an index view and you will be okay. It's being borne out. But having said that, Sandip, you've also said that you agree that the large cap companies will have a slower pace of growth, and so from that perspective, would an investor who looks to take position right now, should they definitely go to the mid-cap companies?
Yeah, so you can go to mid-cap companies, don't buy the ER&D companies. I think I have a very negative view, and honestly, I've been wrong for last 2-3 years on that sector, because that sector has done phenomenally well. But I am very negative on that sector, primarily because that I feel that it is overpriced, although growth will be better. But I think when this Ukraine-Russia war cools off, I think this ER&D companies will have a very, very big challenge to sustain the growth they are doing right now. So I would only prefer IT services right now and hardware companies, and I think good money will be made. Even in large cap, let me put it this way, as I said, the cumulative EPS has to be 45% from here in next 3 years. It is a very good number. So the IT index itself has to do well. And let me also reiterate that while I don't run an IT scheme or IT fund, but there are so many good ex-analysts and fund managers who run sole IT ETFs. They are great, great, people, and definitely, those who want to buy, they can also buy those funds.
I know you won't talk about stocks, Sandip, but when you're saying that you're doubling down on IT services, it's the big one, the big three?
We are a very small fund. As a policy, we don't buy large names generally. So we always stick to very small and mid-sized companies.
No, so that's important, because is there a reason why you're skipping the big ones? If you're bullish on the sector, you don't think this resurgence is going to be led by the biggest players in the industry?
So, Tamanna, 15-16 months back on a very famous podcast, I have said that this time the recovery, when it happens, it will start from micro, small, mid, and then will go to large. So it is a reverse, because remember, this disruption is hardware-led disruption and not software-led disruption or service-led disruption. So the large names don't have an advantage. Second, after 2020, because of the shortening of timeline to execute projects, the advantage which large cap always have gotten for 3 decades, that you have to have minimum revenue, minimum number of people and all that to participate in NDTV, all those have been taken away, and now it has completely democratized, and if anyone who can execute quickly, those people get the contract. So I think for next 5-10 years, in fact, the small, micro and mid cap will have an advantage over the large names. But yes, large names can also...
One second, Sandip, this is important, because it's not just the micro and small cap IT companies and mid cap IT companies have an advantage. It puts the larger players at a disadvantage. The thinking so far has been that the larger players are at an advantage if things change.
So only one caveat I would like to add to my thesis is that large companies have huge cash balances, and you would have seen that recently they have started diversifying in the AI data center side. So, I don't know what will be the positive outcome of that, but that is a very big advantage to them versus mid and small, because they don't have that kind of balance sheet. So, today as it is situation, micro, small and mid cap should do phenomenally better than large cap. But if these large caps are able to, repurpose this cash balance which they are carrying versus dividend distribution or buyback towards AI data centers, which they can definitely do, then, again, we will have to reevaluate our thesis. But today, we cannot make a comment on that.
Okay, thank you so much, Sandip. So it's a bit up in the air, but the conviction on IT remains. So we've got you all kinds of voices, right? You've heard Mihir Vora saying that I'm not convinced about IT. You've heard Sandip Agarwal saying that I am convinced about IT. You decide what you want to do, but his caveat, he's looking at mid-small cap companies as well as on the hardware IT side of things. Thank you so much, Sandip, for speaking with us, and it's always a pleasure to have you on. That's pretty much all the time we have on the show. I want to look